What is happening, everybody? Andrew Ferguson here, going live today with my first ever YouTube live stream. I hope this is working out okay for you guys. And I just wanted to share with you an update on the stock market because things are getting a little bit crazy right now. It's like the market's kind of out of control. So I wanted to give my perspective to you guys. This is how I go about making my trades and my kind of technical analysis to hopefully give you guys an idea of where to start for as well when you're making your decisions on your technical analysis or your investments overall, where the market's at, where it's going. Let's get into it today. This is what the market did this week. It has been a interesting start to 2023. Okay, we have the chart right here, and as you guys can see, if you can follow my cursor right here, we had the start of 2023 down here, the little flag, and we have been on a little bit of an uptick, right? The green is an up day, the red is a down day. Generally, last year we started back here. Okay, this is December of 2021, January, and it was a slow kind of grind and halt all the way down there. But now in the start of 2023, if we zoom in here, right, we've had a nice little pickup. Nice little pickup here in the terms of where this flag started. We've kind of run ourselves up, and this area here is highlighted because something really cool is about to happen, or it could happen, okay? We've had 1, 2, 3, 4, almost 5 days straight of upward movement in the stock market, which is great looking at the S&P 500 or the SPY, which is just the collection of the 500 biggest companies in the stock market. What is about to happen here, though, as you can see, there's this red line coming in, okay? That is a moving average, and it's known as the 200-day moving average. It is a marker of price that many traders use to make their assumptions in their trades in the market. And we also have the 50-day moving average, which is this yellow line down here coming up and coming down, and they're about to cross. And this area is highlighted because number one, the price has been moving up to start the year, which has been great. The market's kind of been ripping higher, and I'm going to get to why that's important and why I think that should be kind of taken with a grain of salt in a minute. But the signal here is that if you see this yellow line cross above the red line, this might be a different color for you on your charts, what you use, or if you want to add these to your own charts, it's the 200-day moving average and the 50-day moving average. When the 50-day goes and crosses above the 200, it is known as the golden cross. It is a breakout signal for the stock market as a whole, okay? And you can see that area is highlighted there because it is close and it's getting close to happening. It hasn't been like that in a long time, okay, going all the way back. When it crosses below, it's called a death cross, and the market tends to sell off after that happens. When it crosses above, it is normally known as a gold cross, a very good breakout for the market. But now, the million-dollar question is it a real breakout, or is it going to kind of break out and then retest and maybe kind of come back down and chop a little bit lower? Well, there's a couple things in play here. Number one being, we made a low back here in October of 2022, and we haven't touched it since, okay? We kind of tried to retouch it here in November. A month later, we tried to hit it again there in December. So kind of 2-3 times here, it's been attempted to go back down to that level. Now we have this nice area of support that's been put in here, and an area of support is just kind of a floor where the price isn't going to break through, okay? It's going to keep bouncing off, bouncing off, bouncing off, and bouncing off. So that's a nice floor right there that we're seeing, and that area of support lends itself well moving forward as we go through the market here, okay? So yes, we have a level of support, which is great, but now we have to understand where the levels of resistances are. And if I'm going to see this golden cross actually happen, I want to see the stock price kind of get through this first level of resistance as it's kind of shown here on the chart. If I just squeeze this up, okay, we have the first one right here at 410. We have the second one up here at 429. These are just areas that act as a ceiling now where the price has trouble getting through or breaking through the ceiling, right? You can't go through, you're going up and you can't bust through. Right here, we tried to get through. We kind of did for a little bit and then dropped back down. We had a small kind of breakout through here, and then we kind of retested it, and then boom, it stopped out right on that line at 410. And over here again, 1-2 times, almost tapped the line exactly, and 410 became the area of resistance. So if this breaks up, this happens, I want to see the stock market, which is the S&P/Y again, going up and seeing it break out above that resistance area. It's probably going to break out, right? And then usually things retest, so it'll come back down. And as long as this holds right here, and then it kind of shoots back up and goes, that is a very good sign, okay? So here's what we're going to do. We're also going to look at a couple other things here today, and these are just the kind of a market update that I'm looking for. That's resistance level number 1. This is number 2 up here at 4.3, but there's something else we need to understand that this may have a big impact on what's happening in the market, and that is inflation. And the latest inflation report came in at 1% or half or a tenth of a percent lower than expectations, which is a good thing. but it's not like it's out of the woods yet. We're looking at this chart right here, and we're seeing that 6.5% is where we're at right now. And the target that we want to hit, or the target that the U.S. Federal Reserve wants to hit, is 2% per month. So we're still a long ways off from that. The last time we were at 2%, right, all the way back down March of 2021, February 2021. So we're still a ways away from that 2%. And if this number ever creeps up, it is ammunition for the Federal Reserve to go ahead and start raising interest rates. And you can see markets reacted little, but then they've kind of broken on the past couple of days, as we can see here. And the markets have kind of reacted positively to the news because it hasn't been above or below expectations, it's been at expectations. So if this happens again and the expectations kind of continue, that is a good thing. But if the kind of numbers start to fade and the Fed has to get a little bit more aggressive in terms of their rate hikes, and just the overall sentiment of the market will shift, and you'll see this kind of breakout kind of reconfirm and kind of go back and retest this support area. So right now, for my money, it's 373 is the lower end of support. When I see the market kind of get down that area, I get interested in looking at opening a position down there. Not like advice for you guys, but it's just what I'm looking at, what I'm seeing. When it gets up to 410, I'm going to look long and hard to see if it's a true breakout or not, and if it's going to kind of hit that resistance area and kind of drop back down, and then kind of hit in between and ping pong between these moving averages. So that is the kind of what's going on in the market right now. It's also coming up to earnings season. A lot of companies here have earnings coming up. If I look at the chart here, Apple, boom, Thursday, February 23rd. They're coming up in a couple months here. I'll go to Airbnb. It's another one here. Coming up in February, PayPal, a lot of big companies, right? February, in the middle of the March, I think Nike gets things ticked off soon. We just had the banking ones. Nike's a little bit more delayed in March there, but earnings season is coming. There's more volatility in the market. The VIX is slowly dropping, but I expect the VIX to kind of pick back up as well, just a volatility indicator, and kind of shoot back up and kind of get up to these elevated levels we haven't seen in a couple months here. But if you want to get information like this for yourself, okay, the next step for you, if you want to get this, I release stuff like this all the time in my actual email newsletter. If you go to tradingoptionsdaily.com, the homepage right here, you can join this actual kind of group that I email out every single week. You can put your first name in there, put your email in there, click sign up now, and you'll be on the email list for market updates, articles, videos that I share, including all the stuff here on YouTube, my podcast. It's all available for free right there. If you want to join, sign up right there. Other than that, I hope you guys got some value to this video, and you guys have a good weekend. Keep investing in yourselves, and I will see you guys next time. Peace.